When you see the market turn into a sea of red, it's easy to get that anxious feeling in your gut, right? But what if I told you that fear is actually a spotlight? This is the core idea we're going to dig into today. You see, all the noise from daily trading, it often hides these massive long-term shifts happening just beneath the surface. But market pullbacks, they strip all that noise away, and that's when you can see the real opportunities.
And look, this isn't just a theory. We literally just saw it play out on November 13th. Fear spiked, the Nasdaq dropped over 2%, and the VIX, Wall Street's fear gauge, jumped 14%. Now, while a lot of people saw risk, that pullback was really just making two incredibly powerful megatrends cheaper to invest in. So, first up, let's talk about the AI industrial revolution. We are moving way past the initial hype and into the phase of a massive physical build-out. This isn't just about software anymore. It's about the actual steel, the silicon, and the fiber that makes it all work. You want proof? Okay, look at a company like Cisco. They aren't some flashy AI chip maker, but they just raised their future revenue forecast. They're projecting $3 billion in AI infrastructure sales. That's a massive signal that this data center boom is being driven by real, sustained demand, not just speculation.
So how do you even invest in this? Well, it helps to think in layers. Right now, the smart money is all focused on layer one. That's the core infrastructure. We're talking 70 to 80% of the capital is flowing right there. This means companies like Nvidia for the chips, Cisco and Arista for networking, and even Vertiv for power and cooling. The applications in layers 2 and 3 are going to be huge, no doubt, but you have to build the foundation first.
And the next crucial data point is right around the corner. Nvidia reports earnings on November 20th. Their guidance is going to tell us if this huge, multi-year investment cycle is still accelerating. It's the catalyst everyone is watching. Okay, now let's pivot to our second megatrend, the great reshoring of American manufacturing. After decades of sending production overseas, companies are bringing it back to the US to build more resilient supply chains. But there's a catch. And here is the catch. U.S. wages are 3 to 4 times higher than in China. So to be competitive, companies can't just move factories. They have to automate them. Robots and smart software, they aren't luxury. They are absolutely essential for reshoring to be profitable. This means investment is flowing into two key areas. First, into industrial automation leaders like Rockwell and Honeywell. And second, thanks to government initiatives like the CHIPS Act, a wave of capital is going right into semiconductor equipment companies. Think Applied Materials, ASML, the ones who provide the tools for building America's new chip factories. Now here's where it gets really interesting. These two trends, AI and reshoring, they aren't happening in a vacuum. They're converging. AI is powering the smart factories that automation builds. So the real question is, how do we translate this insight into a balanced portfolio? Well, here's a potential framework to think about. A 30% allocation to AI infrastructure to capture that core build-out. Then a combined 45% in industrial automation and semiconductor equipment to play the reshoring trend. The rest can be balanced across software and the physical construction needed for all those new factories.
But look, opportunity without a risk plan is just gambling. It is so important to have clear signals for when you need to adjust. For example, if Nvidia's guidance comes in weak, maybe you trim that AI infrastructure exposure from 30% down to 15%. Or if you see broader manufacturing activity slowing down a lot, that's a signal to maybe rotate into more defensive areas. All that market volatility, it really does reveal what truly matters. If you prefer this kind of calm, structural insight over all the daily noise, go ahead and follow for the next update. And let me know in the comments, what's one ticker you want to see analyzed next?